Interest rates are in the news again. Hi, everyone, and welcome to Tampa Bayside Brief, your Florida real estate update, brought to you courtesy of Todd and Paula Diesel, licensed realtors with RE/MAX Bayside in Apollo Beach, Florida. I'm Todd Diesel, and it's my pleasure to discuss the impact that the Fed funds rate could have on mortgage rates. First, it's important to note that the Fed doesn't directly set mortgage rates. Instead, it controls the federal funds rate, which is the interest rate at which banks lend to one another. However, this rate has a ripple effect across the economy, influencing various other interest rates, including those on savings accounts, loans, and home mortgages. The expectation of a Fed cut rate typically pushes down the long-term rates like the 10-year Treasury yield, which is closely tied to the 30-year fixed mortgage rate. This is why mortgage rates tend to decline in anticipation of a Fed rate cut, even before it's officially announced. And that's what we've seen happen over the past couple of months. So what's going to happen once the Fed cuts rates? Well, here's 5 things that homeowners should consider after a rate cut. First, potential mortgage rates dropping. One of the most immediate effects of the Fed rate cut is the potential for lower mortgage rates. Number 2, easier qualifications for mortgages. Lower rates lead to lower monthly payments. That not only helps the process of qualifying for a new mortgage, but it also allows homeowners to refinance. Here's a key point. In 2023, 74% of the mortgage originations for home purchases carried rates above 6%. That equates to 2.6 million homeowners that at some point in the next year or two will have an opportunity to refinance. Number 3, stronger demand for housing. Lower mortgage rates reduce the cost of borrowing, increasing someone's purchasing power, which tends to drive up housing demand. Number 4, improved housing affordability. A 1% decrease in mortgage rates can reduce the monthly payment about as much as a 10% reduction in home prices. And in the Tampa Bay area, we have seen a 15 to 20% decrease in home values over the last year or so. But some are saying now that could be short-lived. Some experts are forecasting an increase in nearby housing prices. And number 5, more inventory on the market. Better affordability means more affordable options. The impact of this is more pronounced at certain income levels, particularly the middle and upper middle income brackets, defined here as $75,000 to $150,000 of household income. In addition, the gains from lower mortgage rates could be even larger, as expected rate reductions could encourage more homeowners to sell, thereby increasing the overall housing inventory. Therefore, if you've already found a home that fits your needs and budget, there's no need to wait for the official rate cut. This may help you avoid increased competition, and you can always refinance when the rates drop later. Let us help you find your dream home. That's all for today, as this is Todd Diesel, thanking you for joining us on behalf of Paula and myself.